Number one rule of Wall Street. Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles. Least of all stockbrokers. Right? It's all a fugazi. You know what a fugazi is?
No, Fugazi. It's fake.
Yeah, fugazi. It's a wazi, it's a woozy, it's a fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart. It's not fucking real.
Right.
All right? Right.
Here we go again, ready for another weekly market recap, wrapping up the month of November and just after Thanksgiving week. So obviously it was a shortened trading week because, after Wednesday, basically we got 2.5 days of trading, and I've seen that, I don't remember, was it on Thursday or Friday? But, even the CME had a little bit of a technical issue and they halted trading. I don't know for what specific reason. I didn't dig a lot into it because why should I have it, right? But yeah, that was it. Now, I hope you fellow Americans are still recovering, or preferably you already recovered from all the excess of Thanksgiving, like all the food and all the booze and all the rest. But nonetheless, I hope you had good times with your friends and families. Now, let's have a look at what went on this week. Of course, from the standpoint of the economic calendar, we didn't have a lot because after Wednesday, basically everything just died off. But we got another weekly ADP unemployment change, which came in negative once again. But, I think this data set, it's just too short. It's just too early to tell if there is a defined trend in this one, right? So just pair it up with all the other metrics that we are looking at for the labor market. And again, just remember that a lot of stuff that we are looking at right now, I think there is still some sort of a disconnect. At least I'm kind of feeling it personally. There is this disconnect because of the longest shutdown ever. So a lot of data which are coming out now, if you check, are still related to September. And so I think just, the market is like, yeah, okay, good to know, but it's basically 2 months old now. So I don't think the market, and even in the price action, I don't think the market, it's really putting a lot of weight onto those. Maybe we are still waiting for the more substantial and more recent type of data points which are related to what happened in a period of time which is much closer to the present. That was my feeling anyway. So, yeah, it came in negative, ADP, employment change, but as you've seen from the price action in risk on assets, I don't think it really threw a dent in what the narrative was for this week. We got, again, PPI, which was, as you can see, related to September. It came in positive, 10 basis points, but, 3 basis points, but yeah, nothing really substantial. I think September related, who cares at this point? We got the retail sales, which came in positive, obviously. But again, if you check the last few prints, it's just trending down slightly. Now, this is a month-over-month type of read. And again, usual reminder, you would need to adjust it for inflation because these data point right here never comes up adjusted for inflation. So, and just to give it the proper context. But if you really want to have something more about the retail sales, first of all, let's have a look at these just briefly, if we can bring it on the screen. So this is a little bit of the trend, long-term trend, as for this data point. And if you throw at it some sort of a regression line, starting from the bottom of the 2010s, what you can see is that, it's not really going anywhere. It's chopping around a little bit, but it is below that type of regression trend line. So you should take it a little bit on the negative side, right? Because you see the huge spike throughout the pandemic with all the stimulus, the stimmy check, the monetary interventions and all the rest. And then, of course, after all that liquidity kind of dropped off, we have seen a little bit of a subdued type of growth in this type of a data point. So is it conclusive? Is it absolutely bad? Is it absolutely astonishing? Well, it is what it is at the end of the day, but it's just, you know, when you adjust it for inflation, I think it just looks better than what it really is. That would be my point on it, right? And I think, you know, since we are starting to get into that festivity period of the year, I think it would be much more insightful to have a look at all these metrics for, you know, retailers, retail sales after the festivities, so we can have a look at, you know, how sales actually went on in a period of the year where, you know, consumers are supposed to spend the most, right? So there will be the usual report put out by XYZ type of firm talking about what consumers did and if they were, you know, willing to spend or not, and therefore kind of grasping their sentiment or their view on the economy. But it's not the time yet. So I think it would be much more beneficial to get back to these type of data points maybe after Christmas, probably in January, right? Now we got the jobless claims as well, which again, not conclusive. I mean, we are still hovering around this type of a midpoint of the entire data set, getting back to 3 years ago, more or less. And, you know, as usual, we got our spikes from time to time, but it has never been sustained, right? You know, rather going straight up or going straight down. So again, this is another type of data, which for me, it's not really conclusive. Even the 4-week average, you know, as you can see, it's pretty flat. Yeah, a few deviations above and below it, but relatively flat around the 225K mark, like this region right here. As you can see, we were just hovering around this level, so to speak, for the last almost 2 years now, right? We came back into it, we overshoot that, and we came back around it, another little bit of a bip, and then below it, and then back to it, below it, back to it, below it, above it, mean reverting to it. So, you know, it's like, I don't know, mean reversion, I guess it's everywhere. As for the break-evens, again, inflation expectations, not really. I mean, or at least this doesn't signal a runaway inflation expectation for now. So, as in the past, I'm particularly skeptical about, you know, inflation renaissance, at least in the very short term. But you know, I know it's the usual boogeyman, especially at the Fed. But if you followed me for at least 3 or 4 videos, you do know that I don't subscribe to this reinflation or inflation reignition type of process that everyone seems to be so convinced about. Not me, to be quite honest. So PCE, it's now at 2.35. It's actually 34, but whatever you, just rounding up the numbers. So you can see it's not really worrying, right? Instead, CPI, yeah, I mean, came back up a tiny bit, but, you know, 2.44%. Yeah, I mean, again, always remind you that latest CPI print was around 2.9, and the Fed target is around 2.4. So we are just right there in the middle. But again, it doesn't look like runaway inflation to me. That's the point. Let's have a look instead at GDP now, which for the first time, it changed in a negative way. I think last week it was 4.2. So it looks like we came down slightly, 3.9, although, you know, again, don't really put a lot of weight onto it. Credit spreads, at least recently, they came back down. Again, ebbing and flowing, but I do only pay attention to these charts, you know, in periods like this, when it is spiking. And again, we have been talking a lot about, you know, the repo crisis, what Jamie Dimon was saying about the cockroaches and all the rest. But, you know, again, people might say there are risks in the credit markets. Yeah, sure. I do believe there are. Absolutely. It's just, you know, the timing of it It's always difficult. And, up until the point it's not reflected in price, or in this case, in the spreads, right? It just means that risk, although it's there, it's not really unfolding itself or manifesting dire type of effects for the broad market in general, right? And another thing, as you very well know, that I've never really, I'm not going to say I never subscribed to it, but I've always warned you, right? It can be particularly volatile because it moves with sentiment, right? Which was, of course, the Fed Watch tool. Now, again, we were just looking at it last week saying, oh, do you notice how this thing started to price in a pause and then no, a cut? We are absolutely certain there will be another cut in December. And then just, 10 days ago, absolutely no cut. The Fed will pause. And now again, 86%. So I guess last week close, it was around 60, maybe 65%. So it went up another 20-ish%, more or less, in just what? Yeah, I mean, a week where there wasn't a lot of trading. So it is just, take it for what it is. I think the best use you can make of it, it's really looking at what is the progression rather than the sheer data point or the sheer data that you can read in real time. Just look at the progression and it might be a little bit more insightful to you. At least, that's what I do, right? Now, after that, let's have a look at the markets and let's have a look at some charts. I don't really think there is a lot going on in markets, especially this week, but nonetheless, a few interesting things actually happened. Now, the DXY pulled back one more time. So, no new highs, but at the same time, we just got back for now into this tiny little pocket right here. Now, is it the, most interesting thing? I mean, it could, when we are talking about currencies, if you pair it up with what we were looking at last week. Do you remember we were looking at this potential divergence in between the DXY, the euro, and the pound? I mean, in my book, this played out. Like you've seen the pound moving up throughout all the week, kind of sharply, right? It started in here, Monday, Tuesday, were particularly upside days. Same for the euro, although again, since, the pound was a little bit ahead in this type of process, the pound actually ended up taking out a high. Now, we could discuss, is this a relevant high? Is this just an intermediate high? And nothing really changed in the grand scheme of things, which, I would subscribe to the latter because, doesn't really change a lot, right? We're just going sideways, but nonetheless, intra-week was a good trading opportunity on a confirmation of a signal that was identified basically when the markets were still closed. Of course, the euro, which was lagging, if you are looking at it relative to the pound, didn't really make a new high, or at least it didn't take out the nearest high. So, yeah, I mean, a little bit of a rebound, but not as strong as the pound, just because the pound was exhibiting those behaviors a little bit in advance. Now, let's have a look at the yen, which I have the wrong way, I guess. Yeah, it should be like this, the too much up all the rest. And same for the Swiss franc, right? There you go. So all of those which got the dollar at the numerator, right? So, well, I mean, it just serves no purpose because as we can see, the yen didn't really go anywhere. So yeah, a little bit of a drawback. This inefficient down move in here was just pulled back in, but yeah, nothing really relevant for now. What else? Dollar Canadian, no new lows, but at the same time, yeah, took out this intermediate high right here, but the key swing should be this one because, of course, it's the latest retracement to an area of previous support, now broken, now confirmed as resistance. So, yeah, currencies are not really moving a lot, I guess. So, yeah, that would be it. So, the other currencies, what are they doing? Chinese yuan came up quite substantially, quite impulsively. So that was nice. And what else? I mean, yeah, the South African rand, a little bit of a bounce, but not a lot. Brazilian real still basically in the middle of the dealing range. If you consider this latest swing low to the latest swing high, we came back down, retesting the swing low, failing at, having followed through below it. And we are just now in the middle of this leg up. So, yeah, again, the Indian rupee still particularly weak. So, yeah, not a lot, really. The ruble finally, it looks like it made it, like we had from the past, these resistance right in here and the subsequent point of release in here. Another push into it, tiny little bit of a pause in here, and then 2 days up, breaking back above this previous point of release, so now reclaimed. So again, I mean, I guess, from a technical standpoint, that should give you the suggestion that we might see a little bit of another try to the upside in the ruble, right? So, I mean, we'll see. I guess, again, it depends a lot on what's going on the geopolitical side of things now with the, or the agreements, or maybe not, not agreements about the war in Ukraine, the peace plan and all the rest. So we'll see about that. I think a lot of that it's driven by fundamentals rather than pure technicalities. But I mean, yeah, at the end of the day, we're talking currencies, so you can't really discard the fundamentals, right? Now, let's transition into oil, which is another one that didn't really offer up a lot to discuss. Again, we ended up last week in here with this down move. So this week, if you look at the close, we are really, it's close enough to the previous weekly close. Let's just do this, for instance. Yeah, I mean, you see that we got a little bit of a bounce and then faded a little bit, and it ended up kind of in the middle of nowhere. So again, we are just operating in this downwarding channel right now. I mean, we got another bounce at, originating from this last pocket of liquidity, which was the origin of this move up. So, it depends what happens next. Like, I don't have a strong opinion on this one because, if you really want to seek for a change in behavior, right? Although we didn't have one in here or anywhere else, but, your best chance would be, okay, so we got this impulsive move up, so we drew it back all the way down, and this is where you should see continuation, or at least another bounce, which break out of this downwarding channel right now, if you want to be bullish oil in the short term. Otherwise, probably going to hover around the lows, and at least for me, it's never good to see an asset which is having a very nice sharp bounce, which is faded almost completely, and then, we manifest weakness with price stalling around the lows. It just means that presumably all the liquidity present has been eroded, consumed, and dealt with, so we don't have a lot of juice into it. And in time, I might expect price to actually at least try to break the lows. But up until the point we don't have one or the other, yeah, again, I was neutral before for 2 weeks, I guess, right? After this bump, basically. So after that, I think I'm gonna get back to my usual, bearish stand on oil. Maybe not in the, in the very near term, but would you call it neutral / bearish? Yeah, I mean, whatever. It just to show that I'm not expecting oil to really skyrocketing in the coming days or in the coming weeks. We'll see, right? Let's have a look at gold instead. Now, gold came back up, and I mean, yeah, we got a nice reaction on Monday, which saw follow through for the rest of the week. we are still, retesting the previous apex, which originated basically the short-term top we are living in, or we are living below for now. And at the end of the day, you could say we made a high high relative to this swing right here, but yeah, I mean, sure, it's not bad. I mean, it's better than keep on drifting down. So it kind of looks like a little bit of a reaccumulation. I don't pay a lot of attention to it, but I was seeing people kind of drawing this type of pattern, which, if I'm not mistaken, should be some sort of a cup and handle type of pattern. So, considering these should now be the trend line, which coincidentally would be in line, with breaking out of that, and then, reclaiming the previous apex base. So, like in this case, could be something like this, right? Getting back in, maybe, and trying again higher. Maybe. It's just, it's not that I'm completely discarding patterns, but I've seen many of them failing at the very last time, and then price getting in the completely opposite direction. So I would believe it when I see it, right? As for now, I'm just looking at price and saying that this is nice. I mean, it's still better than completely dropping off. And it looks, it looks constructive, right? We are now seeing the market not only, avoiding the follow through to the downside, but slowly but surely kind of building up a little bit of a long-term type of a consolidation, which in time could be used as a launchpad for another move higher, right? So again, not bad. I still think it's going to take a little bit of time, but yeah, I mean, it could work. We were looking at this type of a range last week with, the midpoint right around this previous point of contention right in here. So under that framework, this would be what? A retest of range high. So you still need to break out with conviction and then potentially retesting it and confirming it as now potential resistance, flipped as support, and then trading higher for new highs. I'm still kind of positive on gold. Like I do like it even for the long term. I think we are going to see higher prices in gold, especially in 2026, I would say. I'm just, I just think that after huge expansions, right, like these, you might have a period where it needs to go sideways a little bit. Discarding every type of exogenous event or some sort of a headline or news-related type of bullshit. But if you don't have any particularly market-moving news, I think the natural progression should be trying again higher in the future. Then again, at least I try to never put a time span on it. Like it could be next week, could be over the next 3 months. I don't know. I'm just trying to assessing in real time, day by day, week by week, and seeing, if this then that type of logic, right? But yeah, I mean, I'm still kind of bullish on gold for the long term, and even for the midterm, if you want to call it that. Let's have a look instead at Bitcoin. Is this the right chart? Oh yeah, it is. It's just that I don't have the drawing tools. All right. So last Saturday when we talked, it was in here. It was hovering around these recent lows, and it was looking like it was drifting down again. Now again, new week, regular week, trading week actually opened up, and we have this little bit of a rebound in Bitcoin. Now, of course, we started out by reclaiming on a Monday this level right here, which again didn't really offer any type of reaction on the way down, but at the very least, it played a role, although maybe marginally, some might say. But we reclaimed that. We tried to get back below it. The price was rejected if you look at the closes. And then from there, we used it as a new base to originate some sort of a pullback, some sort of a rebound. The first area of resistance was, of course, around this cluster right in here. And as you can see, yeah, we spiked through it and we found a tiny bit of rejection. I'm saying tiny because, in the grand scheme of things, of these asset volatility, this day right here was yesterday, basically. It's not a huge range for these type of asset. And so now, yeah, we are hovering in here. I think, again, being a risk on asset, probably going to follow whatever the other risk on assets will do. So again, we've seen a little bit of a generalized rebound across the board, and Bitcoin just fit right in with that. Is it, something really conclusive? Would you say, okay, this was it, this is the new bottom, and it's upside only from here? I don't really know. First of all, it had a little bit of an anemic type of bounce relative to, let's say, indices, right? After having a much more pronounced type of downside move relative to indices. So again, among the risk on assets is the one which is performing the worst for now. So it could keep on bouncing, but I'm just saying my odds would be a bit more tied to what, let's say, the stock market will do, and then look and try to see if Bitcoin is actually following along, right? And we have discussed the correlations in between Bitcoin, the Nasdaq, and all the rest. I think what could be. Let's see. Should pick my words carefully here, because if you say most probable, it's going to be taken as, yeah, this is what I think is going to happen. But let's just put it this way: what I've seen in the past, right? And therefore, if you've seen it in the past, it's not completely illogical that could happen again. But instead of having an immediate type of rebound and shooting back up to all-time highs, like many people would like, what if we are going to see it being a little bit boring, like around the lows for a while, right? Maybe, I don't know, 2-3 weeks, maybe a month. And then, with the new year, so at the end of December, maybe we could look at it really trying to push back higher, right? Something like it. Now, again, don't pay attention to the time scale that I'm kind of drawing, but just as a concept, right? So a little bit of a choppiness and then trying again higher. So a little bit of a reaccumulation at these levels. Something like what we've seen in here, so to speak. Like impulsive move down, comes back up, then it goes back down a little bit. It tries again, then it goes back down, testing around the lows. We could be slightly above it, slightly below it. I don't really care. And then, finally reaccumulating and trying again for a decisive push higher. Because I think that is what what would be frustrating the most for the majority of the participants. And I think, in markets like these, which are particularly driven by not only leverage, but a lot of, look, forgive me, but I have to say it, tribalism, and, you need to be in some sort of a cult, right? It must be a cult sometimes, right? There is this Team Orange and Team the rest of the world, right? So again, in order to really shake out a lot of people, a little bit of a correction through time, getting it to be boring for a while. And then when nobody's paying attention anymore, well, it's been a month, Bitcoin never did something new after the drop, so I'm kind of throwing in the towel. Then you see the pump coming out of nowhere, right? Could be something like it, maybe. I mean, I would definitely like something like that, to be quite honest. But as for the strict technicalities, I think nothing really changed with this tiny little bounce in here, right? I would say up until the point we are unable to reclaim at least, the 95 region, so to speak. So these region right here, right? Up until the point we are living below it, I wouldn't be super bullish, right? Same as up until the point we hold this region right here, right? I wouldn't be massively bearish. So again, I would operate in this framework right here and see what's going on in this range right here, and nothing really more than that. Just look at the previous levels, which were anticipated support, which, obviously they failed. And so now look at how price is reacting when we get back to test them from the other side. So you can see the type of reaction we got and the type of narrative the market is trying to depict, right? Now, one thing, of course, I think it is obvious in hindsight, right? But if you check the outflows, yeah, obviously they were at record highs because of what? Well, I mean, because, this is one of the sharpest drops that we had recently. So, of course, especially if you look at the ETFs, a lot of people actually got out. Because, again, I hinted at that in the past. I think, bringing in ETFs for Bitcoin was nice if you're just trying to look at the maturity of the asset and the legitimacy of the asset. The point is that now that you got ETFs, you just gave big guys another tool to speculate on Bitcoin, right? Maybe you like it. Like I don't have anything against the quote unquote the philosophy against Bitcoin. I think, I don't think it's money, but I think it's a very nice commodity to have. But the problem is that maybe the rest of the market doesn't look like, it doesn't look at it the same way I do, right? And so they think, well, this thing is going down. There are money to be made on the short side. And you know what? I'm not going to get on Bybit or, I don't know, what can you use these days? But, I'm just going to use an acknowledged type of a legit instrument, aka I could short the ETF to profit off of that, right? And that just exacerbates the move down because you got leverage longs closing down and short sellers piling in on top of that, and this is how you got your sharp moves down. So again, it's not necessarily a positive if you're a believer in Bitcoin that now we got a lot of derivatives on it. And what if 10 years from now it ends up just like gold, right? But basically the price is set up at the CME with futures contracts being traded back and forth, right? I mean, I know it's not the best, it's not what people were dreaming about Bitcoin, but I think, it's just human nature. Even if you think we have something which could work in the future, well, in the name of profit, we are gonna try to find ways to mess it up, right? So just bear in mind that it could end up being like that, right? But enough about Bitcoin. Let's move on to yields. Now, again, yields had a tiny, is it tiny? Yeah, in the grand scheme of things, it is tiny, but nonetheless, a down move towards the lows, right? Didn't really break the lows, but again, if you remember, was I guess 2 weeks back, we were looking at this behavior right here, where yields just had a drawback, attempting new lows, rejecting. So, giving the impression they could keep on climbing higher, and then nope, they couldn't. Down we go. Kind of the same in here, right? I'm just looking at the 10 years for reference, but sharp move back up, some sort of a pullback, deep pullback. It tried to goes back down. Rejecting new lows or no follow through, back up. So this is the end. This is now the bottom for yields. No, down move. So again, which if you remember, if you look at the other side of things, we were looking at the bonds, right, the Treasury futures, and we were looking at these divergence where we got these lower lows in here and a higher low in here. Ironically, the one which had the nicest dynamic expansion to the upside, getting into retesting the highs of this current range, it was the 10-year, right? The one which was breaking the correlation with the other two, right? So I don't think anything really changed in yields or in treasuries for now. It is just a very slow market for the most part. So, don't expect things to change around from 1 week to the next. That's just the way I see it. Over the long run, yeah, I still think I'm still on the go for lower yields, that lower rates into the future. I know the point is always, do you think we're gonna get back to to ZIRP? I don't know, quite honestly. For those which don't know all the acronyms in this crazy financial market, ZIRP is just again an acronym. It stands for zero interest rates policy, right? It's basically when the Fed/the Fed funds around zero or something like it. It's called ZIRP, right? I don't know if we get back there or when we could be back there. It's just, surely I think you don't get there without a catalyst. So you need some sort of a credit related event or some sort of a huge disruption in financial markets. You need something. You need some sort of a crisis situation. Otherwise, naturally, I think rates should never be at zero, right? That there is no, I guess it's below, it's against the law of physics of finance, having rates at zero. But why would you, right? So again, they might go there, but you need a catalyst for it, right? So, I think that's enough for the usual initial assets that we check every week. So let's transition into stocks. Okay, so stocks had a little bit of a rebound this week, as you can see on a weekly base, right? If you check the performance. Now, what really stands out is that, we had a little bit of a rebound, especially in the tech sector. Like you look at Google, Microsoft, Meta, Apple, FGO, AMD, across the spectrum, basically. If not, Intel. But you see NVIDIA, it's still a little bit down for the week. We're gonna look at something interesting. We hinted at this tiny little thing in the past. I guess it was last week. Didn't have a lot of insights in it, but just for the sake of it, I read a few things. It's not massively, it's not the Bible, but it's still something. I'm gonna get to it later on. But just remember that we got Google, very good chunk up. NVIDIA, not so much, right? Just keep it in the back of your mind. Now, as for the rest, if you check instead the monthly performance, what you can see is that, do you remember we have been spending a good chunk of the month of November talking about a rotation happening in the market? And as you can see for the monthly performances, right, you see NVIDIA, Microsoft, all down, AMD down a lot, Meta, Oracle, and Palantir. A lot of these big tech related to AI especially were down. And you have seen sectors which had a little bit out of favor previously, like the healthcare sector, being, very, very, performing very, very well, being up pretty good, like Eli Lilly, Johnson & Johnson, right? So to me, we are, especially considering how price action confirmed this thesis, we were in a rotation back then, and we are still maybe in the last stage of that market rotation. It's quite evident, even if you look at this one. Now, over the last 5 days, as you can see, pretty much every one of these sectors is green, right? And this week, especially, so over the last 5 days of trading, you see that a lot of stuff which went massively down the past 2 weeks rebounded quite a lot, like discretionary, the technology sector, the materials, the financials, the communications, right? And what is getting, toward the bottom of this leaderboard right here is healthcare, right? Now, if you expand this to the monthly chart, you kind of see the same type of behavior we were looking at in the previous screen, which is this one right here on a monthly scale, right? Now, healthcare leading the pack for November, and technology being marginally down, right? So 5% down, as consumer 2% down. So you can still look at the month of November in its entirety as a little bit of a rotational month, right? Because again, what I was trying to stress out, although, the chart, if you're just looking at the index, could have been, kind of ugly to look at, right? Or kind of scary, if you wish. But remember that, all in all, now that we have the data for the entire month, not all the market was just crashing down. Yeah, I mean, considering that the index is structured and built up by market capitalization, it's natural that if you have technology going down, at the end of the day, overall, broadly speaking, the index will be down. But inside of it, you had, as I said, many sectors which were out of favor, like energy, healthcare, staples, which at the end of the day, they provided a good edge for, imagine a structured portfolio. What do, right? If you have things which are massively overperforming, it's just natural that at a point you're going to see a rotation. So you would like to sell or to trim a bit of those positions massively in profit and using, those profits to maybe buy a few things which you still have in your portfolio, but maybe now, because of the current price action, they just went below the weighted target in the portfolio. So, it's always like that. What goes up massively at a point, it will need to come back down a tiny bit. And what was down massively for a lot at a point, when you got these rotations, we'll see a little bit of appreciation. Money will flow from those sectors which are particularly extended to those which never really see a lot of interest over the recent past. And this is kind of the explanation behind what you see for the month of November, right? So just briefly, starting out with that. Now, if we then just look at the charts, and let's start out with the usual intra-week chart. So we ended up Friday trying to put together a bounce, right? I'm going to take ES futures and the NASDAQ as reference point because I don't really follow the Dow a lot, if not for some confirmation signals here and there. But what you see is that on Monday, we have this tiny little gap up, right? So the majority of Monday, especially in London, it was all about testing back into this gap. Now, ES kind of went a bit below it, but if you check, for instance, NASDAQ futures, they were right there on the spot. So we filled in the new weekly opening gap, and we started to rally. And we kept on rallying for basically all Monday, right? Then look at what happened, right? You get into the following day, which is, of course, Tuesday, right? And you have a massive move down, especially at the open for New York, the New York session. What you see is basically the market printing these huge wicks into what? Well, into Monday's high, right? I mean, to the T, basically, on NQ futures. And, ES, kind of like that. So what does it tell you right away is that we rebounded on a Friday, right? We gapped up on a Monday open, tiny, but we did it, right? We held the gap and we pumped straight out of Monday, right? And then what you see the following day on Tuesday, so relatively early in the week still, is that we are rejecting or we are using as support Monday's range high, which in this case is the previous daily high because it's relative to Monday, right? So you got this Monday's range, you break out of it, and then you use the range high as, a new point of support. So that right away tells you that the context now is shifted to bullish, at least again, in the very short term. Now, bear in mind, you still have the huge previous Thursday dump to be rebalanced. So again, that would add another type of a positive narrative to the whole, right? We could still try to test back into this apex right here, right? And we didn't completely fill it in on a Tuesday, right? On a Monday in here. So we do it in Tuesday. Then again, what's going on? you see that basically Tuesday ended up with an up move. Then in Asia, we consolidated a little bit overnight. So London session, what do? We keep on trying to get back below the previous daily high, right? And we just can't. Okay? And then what you see is that we keep on pushing higher. So you see how, you can read the context in real time. And maybe, right, again, maybe you're not particularly sure, you don't have a lot of confidence, straight out the gate on Monday. You may think, okay, but was this gap kind of relevant as a new weekly open gap? Okay, maybe I'm not convinced yet. I'm gonna wait. Okay, but then you see the expansion on Monday, right? And maybe you might say, okay, we are just backfilling this impulsive move down. I'm not convinced. Okay, at this point, right, when you see what's going on Tuesday, Monday's range being held, a range high being held and used as a launchpad for another move higher, at this point, these inefficient move down, it's completely rebalanced. And if price keeps on drifting higher, at that point, you need to be bullish for the rest of the week. Now, you might say, well, but, I missed the bottom. Who cares? Who cares? This is valuable information. At least it tells you that you shouldn't keep on shorting, expecting massive results to the downside this week, right? And actually, what you want to do for the rest of your intraday activity is trying to buy pullbacks and then going long, right? And let it go, let it ride. Keep on riding it to the upside. Again, talking intraday, not talking for next week, next month, right? But this is just how the context and how the narrative is printed on the chart. And you just need to watch at the end of the day, okay? Then, we ended up having this basically no trading area on a Thursday. And, again, as I hinted at in the beginning, there was that little tiny issue with CME on Friday. But for that short period of time where the market was open, futures kept on pushing higher, right? So, yeah, I think at the end of the day, if you zoom out and if the monitor can stay up, right? If you zoom out and if you look at that, what you see is that we basically put in a decent low at this point on both NQ futures and ES futures, right around the 100 days moving average, as you can see. And we now rallied all the way up. I think, the very nice positive thing is that we reclaimed or we traded above the Thursday reversal candle highs, right? In here and in here. If you want to look at the moving averages, right, you could start to anticipate, same as we did in the past, right? Do you remember when the blue was crossing to the downside relative to the yellow? We said, look, if we got that, we might see a bit more of a follow through to the downside. Now, ES futures already saw that blue crossing back up relative to the yellow. And NQ futures are just now seeing the pinch. So it could be confirmed as soon as, Monday, right? So we'll see. But that would be another changing behavior in the very short term, okay? And again, we are now back above basically all the moving averages, right? 100, 55 exponential, 21 exponential, and the 55 exponential in green. So, we had this at the end, if you zoom out enough, right? We had this pause, right? Where the market went up, came back down, testing toward the lows, no follow through down, no really change of the structure in here. And we, at the end of the day, if you just look back in the past, and it's much more evident on NQ futures, right? We kind of had a little bit of a fractal of what we had in here, right? Move down, new highs, comes back down, lower high, comes back down. Okay, now we agree that we don't want to see any more follow through to the downside. Up we go, okay. Move down, comes back for new highs, comes back down, establish a low right in here, test farther down, and we agree upon the fact that we don't want to see follow through below these relevant lows right in here, right? And up we go, we take out a very relevant high. So I think, you can still leave the doors open for a bit more of the same we got so far, so a bit more of a choppy action. Although, again, the trend is up overall if you zoom out, right? And up until the point you see the trend being up, I would bet on more downside to come. Now, since we just wrapped up the month of November, let's have a look at the monthly chart for these two, right? Again, I don't think this is the market that you want to sell, right? Now, you might say, okay, but Anki doesn't look so enticing, right? Yeah, it is true. We tested back down into this moving average right here. Okay. But we took out the previous monthly low and we never traded above the previous monthly high. So we didn't make new all-time highs, but we violated, at least, we traded. Let's put it this way, because to me, violating it's more related to closing above or below a specific level. But, let's say we traded below the previous monthly low, and at the same time, we didn't take the high. So could this be some sort of a change in behavior? Maybe. The problem is, I guess, that on a monthly chart, it will take you another month to confirm whether you were right or wrong 1 month ago, because you would either need follow through to the downside, or, it could totally be that next 5 days of trading, we take out the all-time highs and we make new ones. So just saying, a little bit of a context. When you have these long tails to the downside, usually you have a little bit of an attempt higher first and foremost, and then we'll see, right? So that would be where I am right now with these markets. So I'm not massively bearish. I think the trend is a trend. We didn't have a huge break in structure right here, just a tiny sweep of these lows, but the resolution of that was kind of on the long side. We were talking about, and now I'm going to shift to the other charts, but we were talking about the rate cut expectations, and we've seen starting back at the end of last week with Williams talking about potentially being all right for another cut, 25 basis points cut. And we were looking at, especially the Russell, taking the news very nicely, because of course the Russell, it's much more interest rate sensitive. And it looks like the rest of the market got that memo too. Now you might say, again, as I do believe it is, right? You might say, well, at the end of the day, does it really make a difference if interest rates are high, low, whatever? Or, does it really make a difference if the Fed is setting interest rates or, communicating intentions of setting interest rates here and there? Should it make a difference? To me, no, it shouldn't. It doesn't matter what I think, right? The market is always right? So I do believe interest rates at the end of the day, we would be much better off if we could just get the fuck out of the way and let the market setting up interest rates, and we could just abolish the Fed altogether. And I think over the long run, we would be much better off. But, at the end of the day, it doesn't really matter what I think. It's just about what the market is thinking, right? So in the narrative that the market is building up, I think that the expectations for rate cuts, they definitely played a role, right? Now, let's have a look at these, for instance. Now, what you see is we are just looking, I think these are regular trading hours. Yeah, that should be RTH. There are too many gaps to be extended trading hours. But, I think it's visible in here too. Let's just have a look at the two majors, right? So E-mini futures and NASDAQ futures. So let's try to draw in some sort of a trend line, which would have been your very short-term downtrend, right? After the short-term top that we had. So it looks like, ES trying to break out of that. Anki, two candles already broke out of that. Both reclaimed that very nasty Thursday reversal high, as you can see in here, right? That was that infamous Thursday where Nasdaq was down like more than 1,000 points, right? So yeah, I mean, and then just look at that. These are the all-time highs. So ES futures are what? 1.30% away from all-time highs. Nasdaq futures are what? 3.4, 3.5% away from all-time highs. You know, it's really hard to call for a full-on reversal and the start of a bear market and all the rest when you see the market being particularly resilient around these levels. So I don't think we're there yet. And we have been discussing all the different reasons for being bullish, for being bearish. Just a reminder, since we are now kind of talking about a potential bullish resolution, you remember we were talking about money managers, big guys, hedge funds being underweighted stocks, right? So what if they just use this recent weakness to load up, okay? We were discussing, obviously, the liquidity side of things. So, we got that little spike, I mean, little, euphemism, but little, yeah, in the grand scheme of things, in the repo market. So what if the Fed, could, was able to convince the markets that they had the situation under control, right? That doesn't mean that in the future, that type of situation is not going to present itself again. But, in the very short term, as we do like to look at things, right? I think, again, we have the potential for, to set up new all-time highs, very, in a very short term right here. And then again, seasonality, right? We were looking at those statistics for the latest days of November and kind of the first days of December. Right ahead, mutual funds will start the distribution phase for the end of the year. So even there, if you look at the market next week, or let's say next 2 weeks, and it might seems like it's a bit weak, right? It's not really going anywhere. It's a little bit choppy. Well, just remember, it's because mutual funds are distributing into the end of the year to then be able to, paying the clients, the customers, the holders of the fund, right? Just bear in mind that dynamic. Now, let's have a look at the different sectors since we were talking about potentially a sector rotation. So look at the XLK, so technology, was particularly beaten up and now it's rebounding a little bit. If you then check discretionary, was massively down. So again, a little bit of a mean reversion, right? And then, again, communication was going down, down, and down. We got back into a previous level of support. If you want to, take the entire cluster right here, right? We were approaching that. So tiny bounce. I mean, actually, this is looking quite nice because now it looks like we have a change in behavior. We took out this high right here, right? But what we got, the materials, huge expansion higher, right? So all those sectors which were particularly weak, they had a little bit of a rebound, right? Then again, if you check healthcare, I mean, how long would you expect these to keep on pressing highs? I'm not saying it's going to reverse back and getting back to new lows, but, it's undeniable he had a very nice run over the last 2 months. After, again, being for a good chunk of the year, because we are talking about all the month of April, June, July in here, so, was massively underperforming the rest of the market. So these catched up and all the rest kind of took a break, right? So it's nothing unusual. And this is why, again, we were discussing this sort of a rotational behavior in markets, right? But that doesn't necessarily mean that the entirety of the market will come down or will go up massively. It is just the way it is. This is how money are flowing from one sector to the next, right? I'm going to end up with this slight, overview of all the different sectors just for the sake of completeness. So you can look at all of them. If, you want to have a closer look, these are the tickers, as you can see, and you can check it on your own if you wish. But, that was the thing for me. Now, after assessing the potential for actually setting up end of the year rally, let's have a look at the usual slides. And, it ties in a little bit with what we've seen this week, this month, more accurately, and what we have tried to highlight. If you remember from all the things about the repo market, the AI being in a bubble, not being in a bubble, or what have you, the potential weaknesses in NVIDIA when it comes down to the depreciation of their chips. We were looking at that tweet from Dr. Michael Burry. Yeah, so look, at the end of the day, the month is now over. So let's have a look of a little bit of a, I don't want to really call it a recap, but let's just try to put things in perspective. So first of all, right, let's really start from a very, very high time frame, right? Now, I know this might be irrelevant as for the price action of the next few days, but this is just the amount of time that, very good technologies that we are using yet to this date took in order, to be adopted or to gain a good chunk of users, right? And, you see Twitter, Netflix, Facebook, Spotify, Instagram. So you have the number of users on the vertical axis right here, and you have the time on the horizontal axis, right? Look at ChatGPT. There's never been something in history which gained a lot of attention, user base, whatever you, than ChatGPT. Now you might say, well, okay, it doesn't necessarily reflect the price action of what could be all the companies related to AI. Yeah, I would agree on that, but it sure as hell, it is a good representation of humans interacting with the new thing, being interested around it. So the interest which is built up around the new, flavor of the month. I mean, in this case, might be the next decade, who knows? But you get the gist of it, right? And, from interest, from attraction, from sentiment comes all the rest. So then you transition into the CapEx. So all the investments in AI, you transition to, people really likes that. People really find potential in it. It's going to be the next big thing. And you build up a narrative, right? Same as it was with the internet, okay? And narratives are very powerful. They don't last forever, but up until the point they last, they are very powerful in nature, right? Then, there is this usual analog of, getting back to the theme. Are we in a bubble? Are we not? Look, maybe we are, right? But just remember, and again, you don't have to believe in analogs per se, but it's just, the good old saying, history doesn't repeat, but, often it rhymes. So this is basically the dot-com bust and how it was originated. We had a nice exogenous event with LTCM blowing up, right? Long-term capital management, for those which don't know, just check it up. They were supposed to be genius, and, turned out they weren't. And the market took it very badly. But that doesn't mean that, the bubble was over, okay? And actually, he kept on pressing for another, another 2-3 years before completely deflating, if I'm not mistaken. Don't have a lot of, the time on this one. It's a little bit off. But, I would say that, the blow off top was this one. Timeline would have helped in this case, but nonetheless, it's still kind of to point out the fact that we maybe we are looking at the same type of behavior or some sort of a similar pattern ahead, right? In this case, it was the tariffs, right? And then, the market, it took a while to recover, but, it kept on grinding higher. So who tells you that, or no matter all these talks about AI being dead, in the future, you will see, that AI will be alive for much more longer than what you could think of before actually blowing up, right? So just to give you a little bit of a context, right? Now, these are, again, the CapEx spending, which it's still going up and up and up. Now, you might argue about, well, up until the point it was operational cash flow being diverted and used to fund this AI thingy. That was all well and good, but now these companies are going into debt. Yeah, true. Right. Okay. But again, even if they do, they have a much bigger cushion than what someone else could have before, again, actually blowing up. It is a matter of revenues into the futures, of course. They need to find a way to monetize this thing, I guess. Yeah, absolutely. But, it's just, look, at the end of the day, you might have some assets or some companies blowing up, right? We've seen it in the past, even when we were building up the railroad system, a few companies went bust. But at the same time, these are the periods where technological breakthroughs are actually achieved. Or when we were laying down all those fiber cables, right, in the dot-com bust, right, thinking that everyone would have used the internet and we needed that much capacity to move a lot of data from point A to point B. And then we find out, okay, but beside from some marketing, no one is really using it. And we got the bust, but we still laid down the infrastructure. And then again, a few years later, Google came up with this thing. I mean, they didn't came up, they bought it up. But again, they find a use case for YouTube. So now all that optical fiber cable actually serves a purpose, and we have the infrastructure to build up what was the digital revolution and the digital economy of our times. So, yeah, I mean, it's fascinating to see that at the end of the day, financially for your portfolio, you need to assess the risk and to manage the risk. But that doesn't mean that what we are witnessing in real time is just the future of tomorrow being built up today, right? And again, at the end of the day, there are going to be winners and losers. So the problem is trying to identify, based on fundamentals more often than not, who would potentially be the winner after the bust and who could be the loser, right? Now, again, just looking at the XLK, right? How many times the AI narrative was defeated, right? Over the last few years, for instance, right? It was always a problem of valuations. Yeah, and I do remember the DeepSeek moment because I recorded 2 videos on it. If you want to go back in time and look at it. And again, even in those, yeah, maybe could be a problem, but is it a problem now? Do we have something tangible now which could defeat the AI US bubble or, dethrone NVIDIA, right? And again, speaking of NVIDIA, right, we're going to get to it in a minute, but let's keep on, just for the sake of it, if you just throw a long-term chart with something simple like a moving average, right, you see that, there are things which can help you out if you're a long-term investor, being massively exposed or, massively reduce your exposure, right? It's just, sometimes the simple things are the ones which are working the best, right? Now, let's try to move quick. Now, look, as for, the breadth of the market, I mean, I would say we are still looking at some sort of a trouble from that perspective. So the breadth, it's not enticing, right? No matter the rebound. So you need to take it into account, right? Price action might look good this week. I think it could keep on being good, at least for, getting into the year end, right? But, you can't just turn the other direction and saying, yeah, well, that doesn't matter, breadth, who cares about breadth? You don't care up until the point you care, right? So just for the sake of, keep on monitoring just in case, all right? And that, again, that would be something which, it's signaling a little bit of a potential weakness into the market, right? When the breadth, it's kind of deteriorating, that doesn't necessarily mean, again, I'm going to repeat it once again, it doesn't necessarily mean that the market is going to pull back or, to experience a downturn the very next week It just means that the market, it's much more vulnerable to a change in tone, to a change in behavior, right? The resiliency of the market is a little bit deteriorated because, overall, the majority of the market wasn't performing particularly good ahead of times, right? So just to give a little bit of clarity. And yeah, I mean, if you just look at the sheer performances of the market, just, the S&P in this case. So we are looking now at the members of the S&P, so the single stocks, right, actually beating the overall benchmark. And I mean, this ties in with the breadth discussion. Doesn't look so good. We have been in here maybe another 2-3 times, and we're in bad times. We're in good times. 1998 and 2023. So, again, always keep an eye out for these type of dynamics, going on, the underlyings of the market, right? But nonetheless, there are many other things to be maybe a little bit optimistic, at least in the short term. It's kind of a double-edged sword, right? Because if you see traders buying at the deep in leveraged ETFs, yeah, it might be that in the very short term, they are buying this dip once again, and the market will go up. Absolutely. Problem is, it keeps on fueling up the rampage of speculation, the sheer and crazy amount of risk taking. And we do know that in time, it's not going to end up well. But again, just because we know it's not going to end up well, we don't know if it's going to be next week or next month or next year. So at the current moment in time, what we need to assess, especially if you are trading in the very short term, right? It's just, there is still a risk appetite, right? So people are not throwing in the towel necessarily right here, right now, right? And yeah, again, speaking of risk appetite, right? I mean, this is just the way it is. Liking it or not, it's not our job to argue with other market participants, but our job is just looking at what they're doing and acting accordingly, right? As I said, the market is always right at the very end of the day. And even if you think the market is wrong, it doesn't really matter if it's going to keep on moving against you, right? You might be right, but if the market begs to differ, you're fucked, essentially. Now, when you look at the cash balance levels, they have declined. So that means that, all that cash must have been gone somewhere. Now, it doesn't, in a nutshell, it shouldn't necessarily tell you where the cash went, right? But, since the moment that we are talking about US equity mutual funds, I guess, the answer, it's pretty clear. And this was for October, basically the end of October. So again, it might be that with this pullback that we got in November, we just rebalance things out, and now we might be ready to, to keep on progressing to the upside, right? We were massively allocated in October. At the end of October, we spent the month of November actually pulling back. So if we pull back, it must mean someone actually sold. So, that amount of money which were now stockpiled on could have been deployed throughout the month of November, and especially, as we have seen, this very last week of the month. Now, here's where we got into the Google versus NVIDIA story, right? Do you remember we were talking about Google potentially implementing a new way to train AI with something new, which doesn't necessarily rely so much on NVIDIA chips? And this is what they were talking about. Now, first of all, you got a little bit of a divergence, right? And if you remember, we were looking at it right in here, right? Let's go to the monthly. For the month Nvidia is down almost 15%. Google is up almost 20%, right? Which is reflected in this one, although on a much smaller time scale, right? But there is a little bit of a divergence where Google is going up, Nvidia is going down. Okay. Now, again, by looking at it, you might say, I wonder why. Again, it's still over the potential future developments in these AI environment. And what do I mean by that? It's a bit clearer if you check this one out. So I'm not going to read it all. You can just pause the video and read it for yourself. But it looks like Google developed these new tensor processing units, which can be much more cost effective and power efficient relative to NVIDIA GPUs, right? So that in a nutshell, they could steal a little bit of a market share to NVIDIA if other companies will decide to shift to these, to transition to this new type of thing in order to train their AI models or to build up the data centers, right? I mean, we'll see about that. I'm not completely sure of anything, but I would just say, in order to not being completely one-sided, that if NVIDIA is already the leading factor in this environment, would you think they don't have the ability to shift to these new TPUs thing themselves and starting to sell it out to their already established client base in a very short term? Maybe not, but it's just, it would be strange for me to think that in a matter of a few weeks, if not a few months, you would see a change in the leadership of this sector just because Google came up with this new way of doing things. Now, sure, it could be something which changed things a bit, but, I'm not expecting, just for this tiny thing right here, I'm not expecting NVIDIA to collapse over the next few months just because of that, right? But again, it's, first of all, I think it is the explanation in between the divergence in between NVIDIA and Google currently. And I think that at a point, if someone comes up with a new way, with a cheaper way, with a much more power efficient way of doing things, well, that thing would be adopted. But just because Google does it, I don't see why NVIDIA could just follow and jump on that bandwagon too. I don't think they lack the technological means for that. So overall, in time, it could just be a massive improvement for the sector and the environment as a whole, right? So we'll see about that. It was just interesting to have a little bit more of insights in what we hinted at last week, right? Now, their positioning, it got back toward the zero line, right? So again, not extreme one way or the other, which again, to me, it would be a sign that we could have, again, the dry power for fueling a little bit more of upside. Now, I think this one is relative to Monday or Tuesday, so it could have been changed throughout the week, although very short-term trading week. But, nonetheless, at least, although at this point it's just hindsight, but at least it gives you a little bit of another explanation for the very nice bounce that we had, right? Then what we got, again, looks like the flows of the markets, so Mondays, actually, were particularly strong historically in December. So that could be another reason, again, together with seasonality, why I say that maybe there is the potential to set up a end of the year rally, right? Because at this point, the positioning wasn't particularly exuberant to the upside. The market got back, and again, let's get back to the chart just a minute. Where was it? Okay, right. Now, it's not really evident on the RSI, if not that we got back to test around the bearish control zone, and we rejected that. but the stochastic actually crossed to the upside from, relatively, low levels, 20, maybe, 2015 on NQ, and 20 on ES, right? We are now looking at a cross to the upside on the MACD. So not only the positioning wasn't exacerbated to the upside, but the market was bouncing off of a position where, it was decently oversold, right? So we already got rid of that overbought condition and things were, back in balance, so to speak. If not, just went completely to the other direction, to the other opposite of the spectrum, right? So again, this could be another reason why we might see a bit more further upside into year end, right? And look, this time around, hedge funds actually bought. I mean, they were net buyers. And, to levels which we didn't see very often throughout the last 2 years, right? So again, we got back into the narrative. I am underweighted, so maybe I should take a chance here and load up on the things that I want to hold and present my clients with. When I show them the report, our performance, what stocks do we own in our portfolio, right? So yeah, it could be another dynamic which add to the bullish side of things, right? And yeah, again, this is just the usual representation of what we were discussing last week. So the end of November, right? So we are on track for what usually, and again, getting back to the 50s, the month of November, especially at the end of the month, kind of shapes itself out. So, nothing really huge. Needless to say, it was a very volatile month, as you can see in here, right? The month of November was all about, going up, coming back down, getting back up, down again, and up again we go. So, I guess the point is, not only the amount of money which got in, but now this one right here, the close, for the month, was the bigger November reversal ever, which, I mean, for the sake of stats, must mean something. Maybe, right? But, again, other than that, I don't think there is any more to say, especially after a short week like that. We'll see next week. Again, just pay attention to the initial stages of December, potential weakness, a little bit of a choppiness, maybe mutual fund distributions. But after that, if we can pass the first, let's say the first 10 days, so the first week and a half of trading for the month of December, if we can pass that unscattered, and the market, won't have a massive drop, then again, I think we could be set up pretty good for new all-time highs getting into year end. When I say, the market doesn't drop, could we see a little bit of a pullback in here? I'm just going to take ES for reference. Maybe getting back around the cluster of moving averages and going choppy a little bit in this range for a while. Maybe, but, up until the point we don't really get below the lows or around the lows, and we keep on rejecting them, I think we're still set up for a good end of the year. And again, of course, we are going to reassess everything week by week, but for now, that would be my, my base case, right? We'll see if it holds any water, keep on progressing into the future. But for now, I'm going to wish you a very rest of your weekend. Have fun, relax a little bit, have some rest, and as usual, be nice and be cool. Niels out.